Hello, Mavericks. How's it going? This is Rob Reinhold. It is August 11th, and let's jump into the market roundup. This day today was a little disappointing. We started off with a lot of promise. Last night, Disney beat earnings overnight, was trading up 11% at the open. This morning, we got the PPI report. The estimates were that producer price indexes was going to go up 0.2%. It fell 0.5%. So again, we got that big report on Wednesday of the CPI less than expected. This PPI was much less than expected. The market loved it. The market had a very strong open, and then it lost it. About 2 hours into it, it just lost it, and it fell and fell and fell. And you can see we closed really near the lows here. So if we take a look at the SPY, we cleared out of that short-term resistance right there at the 415 level on Thursday, but the problem is we've got a whole bunch of overhead resistance, and we've been talking about this for the last 2 weeks, how you have to be bullish in this market, but you cannot ignore the fact that we are running right into these really serious resistance levels, meaning you can't be that bullish. And today's candle is just telling us, hey, we don't have a ton of energy. This isn't like a runaway bull market like we saw in 2021. This is going to be a market that struggles to go higher, even though it is going higher. So we've been talking about a lot of diagonal call spreads on the long side, some verticals, but really no long calls at all. That's going to be the better play here in this kind of market. The Qs were even stronger than the SPY, but look, we are right into this really big band of resistance, and we hit our head against 330 and we came down. That's a pretty nasty candle there, bearish engulfing candle. So look, probably Friday, we probably get a little bit more selling, maybe a sideways candle, but I don't think we have enough oomph here, at least on the NASDAQ, to break out of this 330. Maybe next week, but for the rest of this week, I think we just basically consolidate gains, maybe fall a little bit lower. If we take a look at where the strength and weakness was in the market today, you can see the energy was pretty much all green across the board. Energy did really well, and financials also did quite well. Where was the pain? Worst sector was healthcare, was the worst sector for sure. We still had more up stocks than down stocks, and we have over 3/4 of all stocks are above their 50-day moving averages. So look, yes, this was a disappointing day for anyone bullish who thought we were going to run. It sunk back down, but this market is still more bullish than bearish. So let's really take a look at where we are here in the cycle. We've been at a +2. That is a moderately bullish market, really since the middle of July. Middle of July, we had to switch over to more bullish than bearish. We are not ready to go to a +3. Take a look at that 50-period moving average. It is just flat. Until that steepens, we cannot go to a more bullish stance than where we are right here, right now. That candle today tells us, hey, we're probably going to sit at these levels for a while. I remember Darren and I over last weekend, we argued whether it was going to be a 0 or a +1. I argued that it was going to be a 0. He thought it's going to be a +1. And kudos to him, he got it more right than I did. This has been more strong than weak during this week's action. But ultimately, I hope everyone understands where I'm coming from. This is a bullish market, but it's not anything like a runaway bull market. This is going to be a tough fight higher, but you cannot be bearish in any way, shape, or form. This is a moderately bullish market at the moment. Let's take a look at some potential trades for the rest of the week. First one I want to go into is Lee Automotive, LI. Bull flag pattern where you have a huge run. The stock goes from 22 all the way up to 40. That's almost a 100% gain. And then, of course, it just runs out of steam. But you can see it is not a real steep give back. And it's pretty much given back 50% of its gains. That is a great Fibonacci line right here. We can't buy here. Today's candle was nice. It held on to a gain of almost 4%. We need this to get above this trend line, and we need it to get above the 50-day moving average before we can get bullish. So this one's not ready to go yet, but I think next week, this is potentially a nice breakout and a potential retest of all the way up to that 40 where we ran out of steam. Another bull that looks great here is Cummins, CMI. Great breakout of a high base here. Look, yes, it didn't run today. We have a doji here off of a breakout. This is where I love the diagonal call spread strategy. I'm looking to go long the September monthly 220 calls, and I want to sell next Friday's 225 calls. This is going to give me a risk graph. This is going to give me a risk graph that looks like this, where at 225, this is going to be my max gain point. I'm going to be in this trade for a total of 6 days, tomorrow and the next 5 days of next week, and then I get to reevaluate what I want to do. As you can see here, break even is probably all the way down to 222. That means if it's anywhere in this area, I'm great. It's perfectly fine. And if it does take off and run higher, guess what? I still make some good money on a short 6-day trade, and I will pack up my bags and leave if it runs higher. If it's still hanging out around this 225, well, now I have a decision to make. Do I want to keep that September long call and maybe sell the next week's against it and do another diagonal spread? Or I can look to exit the entire thing. I love these diagonal call spreads. This is a very solid +1, +2 strategy, and it matches the market perfectly. This is a trade from one of our traders in our live session yesterday. It was a call on a butterfly on Facebook with a little bit of a bearish tint. So the call was that it was not going to break up above this 185 point, and we were going to sink back down into this range right at 170. So it was a 160, 170, 180 bearish butterfly, and I think this works out really nicely for next Friday. Couple of down days next week. This is just going to be a really nice solid trade. I do like this one for a short-term sideways trade on Meta. Another trade from yesterday's live session from one of our traders. This is Intel. You can see here we broke through this major support. Intel had some really lousy earnings right here. And we broke down below the support, and here we are. We came back up to it. It looked like briefly it was going to break above, and it fell right back down. Tomorrow, give me a red candle, and that is a very nice entry point. So looking for a close, a lower close on Friday would definitely be a trigger for an entry. And I think you could look for a 34-36 bear call spread. And again, you could take a look to next week or the week after that. This one looks like it wants to continue to move lower. This has been moving lower in the face of a bullish market. If we get any sort of selling next week, it's really going to help push this one down. And the last one I'm looking at on the short side is this one, SSRM. It is a gold mining stock. And you can see we had this really big low base form. We broke, we popped up to it. Look at these candles, nasty candles that tried to break back up above this resistance of 16 and just couldn't do it. Every candle was a red one. And today we got a big fat red candle on a day where the market was actually fairly strong. This one was weak from the beginning and it closed on its lows. I don't think you can get any more bearish than 15 here. The market is not saying to be very bearish either. It's not saying being very bullish. It's definitely not saying be very bearish. I'm looking at like a 15, 16 bear call spread. You're going to bring in a credit of about 55 cents. You've got 45 cents of risk. And that's the trade. It's a very simple trade. If it goes below 15, you get max gain. If it goes above 16, you get max loss. Anywhere in the middle, you get a small gain or loss based on where it closes on your expiration. Pretty simple trade here on SSRM. Let's take a look at tomorrow. Today's failure to run after a breakout means that we're likely not going to break out and run, but it doesn't mean we're going lower. I think we just churn around here. We spent a lot of time to get through this resistance level, but we ran right into another resistance level. And so the markets just got to churn in these levels until it can break out and really run higher. Tomorrow we have University of Michigan consumer sentiment at 10 a.m. That one probably isn't going to matter all that much. With these inflation reports out, people are going to be looking towards next month. And we do have some few notable earnings. Can it be growth and DraftKings on the docket for tomorrow morning? Well, that is the market roundup. Thanks for joining me. Happy trading, everybody. Goodbye.